This is a critical market alert. While many are watching gold, silver is preparing for a move that could send prices to $300 by mid-2026. After shattering records at $94 and even touching $120 temporarily, the stage is set for a historic compression of the gold-to-silver ratio. Historically, when silver was used as money, the gold-to-silver ratio averaged 15-1. Today, with gold over $4,500, that ratio points to $300 silver. The ratio has been as high as 125-1, but as it compresses back to historical norms, silver will significantly outperform gold. In the Roman era, the ratio was even tighter at 8-1. A return to these fundamental levels would imply silver prices that today seem unthinkable to the average investor. But silver isn't just money. It is the essential industrial metal of the 21st century, the primary conductor for the green energy revolution. The solar industry alone consumes over 25% of the global silver supply, and that demand is projected to double by 2030. Every electric vehicle contains up to 100 grams of silver in its complex electrical systems, advanced sensors, and high-efficiency batteries. And now the AI Supercycle has arrived. Artificial intelligence infrastructure requires silver for high-efficiency electrical components and precision contacts. From 5G infrastructure to the advanced chips powering the next generation of AI, silver's unmatched conductivity makes it truly irreplaceable. This industrial demand represents over half of all silver consumption, creating a massive, price-insensitive buyer that will pay whatever it takes to secure supply. While demand is exploding, the world is facing a structural supply cliff. We have seen consecutive years of deep deficits that are only getting worse. Inventories in London, New York, and Shanghai have been drawn down by hundreds of millions of ounces, reaching their lowest levels in modern history. Crucially, 70% of silver is produced as a byproduct of mining copper, lead, and zinc. This means higher prices don't automatically lead to more silver mining. Major primary silver mines are nearing the end of their lives, and there are very few new large-scale projects ready to take their place in the coming years. The geopolitical landscape changed forever in early 2026 when China reclassified silver as a strategic mineral and placed strict limits on its exports. By fragmenting the global market, China has effectively cut off a major source of supply for Western industries, exacerbating the physical tightness. We are now entering what experts call the mania phase. This is where physical supply can no longer meet the simultaneous demands of industry and investors. Retail investors are piling in, driven by the fear of missing out, while institutional funds are starting to allocate billions into silver for the first time in years. Even emerging market central banks are reportedly beginning to stockpile silver as a strategic and monetary asset, following the path they took with gold. In a world of rising fiscal deficits, soaring global debt, and election year spending, silver remains one of the few assets that cannot be debased by government policy. As paper currencies lose their purchasing power, the rush into hard assets like gold and silver is accelerating to a pace we haven't seen in 50 years. Inflation isn't just coming, it's here, and silver is historically the most explosive way to protect your wealth during periods of currency instability. Make no mistake, the journey to $300 will be extremely volatile. We will see sharp corrections and gut-wrenching swings along the way. The silver market is small and illiquid compared to gold, which means even a small amount of money moving in or out can cause massive price movements. Sourcing physical metal will become the biggest challenge. Premiums on coins and small bars are already starting to rise as retail inventories dry up. On the major exchanges, the registered silver available for delivery is at levels that could lead to delivery defaults if even a few large buyers demand their metal. A delivery failure on one of the major exchanges would be the black swan event that sends silver prices into a true parabolic ascent toward $300. Institutional buyers are already moving metal into private vaults, taking it off the market and making it unavailable for speculators to short. So how do you position for this? First, focus on physical ownership. Second, be prepared for volatility. And third, understand the long-term macro drivers. Physical silver in your own possession is the only way to ensure you aren't holding a paper contract that cannot be fulfilled when the system tightens. Patience is your greatest asset. The path to $300 isn't a straight line, but the destination is being carved by the laws of supply and demand. While mainstream banks are conservative with $65 targets, the physical market is screaming that a much higher price discovery is underway. We are witnessing a regime change in the commodities market. Silver is finally being recognized for its true scarcity and essential industrial role. The $300 target isn't just a number, it's the result of a collision between limited supply and the needs of the modern world. GSR Compression, the AI Supercycle, and an unprecedented vault drain. These are the three pillars that will support silver's rise to mid-2026. Navigating this environment requires discipline and a deep understanding of the macro forces. Stay focused on the fundamentals, not the noise. As always, this information is for educational purposes. Please consult with a certified financial advisor before making any investment decisions. Thank you for watching this market alert. Stay informed, stay vigilant, and we will see you in the next in-depth market update. The story of $300 silver is just beginning. Make sure you're on the right side of history.